I'll start now. I heard I had a black screen. How you doing, Brock? That must mean the year is almost over. Thank you, Blake. Everyone doing okay? Louise, nice to meet you. Paul? Okay, so we're going to be here all week except for New Year's Day, which is Wednesday. And, you know, last week we weren't here Friday. I think there were a couple of important things that happened on Friday. Just like right before Thanksgiving, that's when we had a turn in the dollar, you know, when everyone was away. Sound and image is clear. Okay. So 112 was kind of the line in the sand, technically. But then I look at the weekly and it makes me not want to chase it. Okay, because I look at this and what do we have here? I think it's going to be important what kind of close we have. We're not accelerating above 112. It's hard to want to fade it too as well at this point. To me, it looks like, you know, 110.80 is kind of the line in the sand for it, and we have a confirmed high. But I'm having a hard time wanting to do anything here. Now, this is something that I think told us something Friday. It's really unbelievable to me, and that's why on this candle I took some shorts on yen Friday. That we had, you know, 1, 2, 3, 4 attempts to clear out the stops above this high. So, you know, we kept holding this 109.40 level. You could kind of see it's a pivot here, right? I think we've gotten the first breakdown. Any bounces in yen, I think, should be contained up around the 109.40-ish level. And when you look at it, it's a big rectangle. So if we start taking out these moving averages at 109, the bottom of the rectangle comes in at 8.5. And then you get a little bit more macro about it. Here's your daily. We start taking out so here you are, here's this like 870, 850, all the moving averages. Interesting, it happened right after a cross here. But this could be the rollover. Steve talked about the risk reward, shorting it here with stops over the top of the rectangle. Right now, it looks like it's going to roll over. I keep looking at correlations, and, you know, with the yen down, you would think yields would be down. They're not down. So a lot of these correlations have disconnected. And in fact, the 30-year looks like we're on the verge of higher yields coming. The 10-year doesn't have much overnight stuff going on here. All right. So, you know, look like it might roll over. Perhaps, you know, we're still going to break out this ascending triangle. I do think that we're due for this correction in the S&Ps. The boy who cried wolf cried eclipse, which was on Thursday. And then Thursday night overseas, we peaked. Okay, any astronomical event, you ask any cycle guy, and they'll give an event 24 hours on either side of the day. Okay, so it was Thursday, and, you know, we had this high on Friday, decent sell-off here that we had from the highs. Here's your 15-minute chart. And the market's been trying to recover. To me, it looks like we should at least see 3,200. And then I saw Steve had a Skype on Friday. We were communicating via Skype on Friday. And Steve talked about that he thought New Year flows could take us back to 3160 in the S&Ps. And that wouldn't even damage it. There's your 200 on the 4 hour. Here's your daily. Okay, so your 50 days is going to come in 31.30-ish. So I think that's viable, with risks over the high of the move from Friday. And perhaps that's what the yen is saying. And if the dollar doesn't get going and the dollar starts to turn again, because, you look at the dollar index and it was sure a tough trade last week, wasn't it? Look at this action that we had. And then this was Friday. And, you take it out to the weekly and it's almost like it was a stop hunt and we took out that low. So these lows are holding right now, this 96.5 level. And just like I was saying, I really don't want to short the euro. The yen looks to me to be one of the cleaner shorts. And then I'm also looking at this. So Canada broke out of the wedge. Remember last week we had some bad news. And then, 140 was a pullback buy and it just couldn't get going. But look at where we're at again. We're really at the bottom of the wedge. I could readjust this now, right? Isn't that trading? Adjusting, readjusting, assessing, reassessing. It's a continuous gig, isn't it? I have a pretty interesting guest here today that you guys may want to, people who think that central banks have rigged the game, why don't you stick around today for Richard Field? And just the title of his book is interesting to me. Here. That's Transparency Games, How Banks Rigged the World of Finance. So this could be a pretty interesting interview that we have coming up. Nice of Richard on a holiday week to take time off. Everyone's still really on vacation, probably till next week, even though the first is Thursday. But Friday, I think we have NFP. So I'm kind of in the saddle. How are you guys? One leg over the saddle. So that's what I see this morning. Hoping that 2020 is a great year. Nomi Prinz, I'm not familiar with her. In fact, I'm just getting familiar with Richard Field. But thank you, Forex Gal. Good morning, Blake. How are you, buddy?
Hey, good morning, Dale.
How you doing?
I am kind of like you. I've got one leg over the saddle.
Okay.
That's a great analogy, actually.
It hurts.
It hurts. So he didn't have a cup on.
Yeah, I didn't know you needed one to horseback ride, but
hey, there's news. There's news out that China is actually coming in to sign the deal this week.
Wow.
The end of this week. So it says China, U.S.-China Phase 1 proceedings are happening this week. And that's via the Chinese media. Remember, that's all. We already know that that's happening. So it's
okay.
But
it's
that's
in the market.
It is in the market right now. Okay. But regardless, it's news that it's getting signed. Now, did you say you had an eclipse? We had an eclipse on Thursday.
Solar eclipse, yeah.
Yeah. Oh, well, yeah. Maybe that was the reason why the stock market did peak.
Everything's a cycle, everything's interconnected. Whoever created this, universe, there's math, it's all math. And I've just noticed, I know people think I'm cuckoo, but I've seen some eclipses turn out to be pretty good inflection points for a while.
And maybe it will be. I tweeted a chart this year. I did do it this year. It's not next year yet. No, I tweeted a chart actually yesterday about Japan, and I found it really interesting. Let me see if I can pull it up here. Here, let's go to. I pulled up the Nikkei, and there's this one talk that really has stuck with me over the course of the last couple of weeks. I watched on Yahoo Finance. There was an interview with Gunlock, and I gave it to, I think I gave it to everybody
You
at
did.
the end of last week. And I know I put it in our ForexAnalytix chat, between the team, how he had talked about, the market is in in this, it's like four different segments of the world, right? You had Japan, which is the second largest economy in the world. They had their heyday in the 80s.
Yeah.
Then it was Europe in the 90s, and then it was the early 2000s. It was Latin America, and now we're just wrapping up like the North American dominance, if you will, in equities, and I went back and I looked at this like Nikkei chart from years ago, and you can see back in '89 we peaked, and right at the end of the '89 we peaked, and then the market sold off and never again. And there's a lot of reasons why we peaked back then. A lot of people will blame demographics and whatnot, but the fact of the matter is, the Nikkei just peaked at the end of the year. And I was looking at the S&P just kind of rallying into year end, and whoops, that's not what I wanted to do. Hold on, let me minimize that. I was looking at the S&P into the year end, and we were just, rallying into year end, just, blindly squeezing out everybody, all the shorts. And I don't know if we peak now, but I'd venture to guess that we're probably pretty close to the near-term highs in equities. Whether it's like the all-time high for the next 30 years, I doubt that. That would be a very big call. That's a call that I'll leave for people like Jeffrey Gunlock. But what I am noticing is that the end of year flows probably took us to where we're currently at. And, will we sell off from here? I mean, it's possible. I look at the, this like minor trend line here, and I think that, if we start breaking back below 32, 3,200, 3,220, we might have a near-term top. Like I said, I'm not necessarily in the camp that this is the high, but
high.
Huh?
A high.
I would say it's probably, near term, we're pretty darn close.
Why can't we go to, correct to 3,100 or whatever? And I know a lot of the bulls are now banding about 3,500 S&Ps for this year, Blake.
Yeah, I think 3,300 is a very logical place. That's the 161% extension of the most recent move, which would be, when I say recent move, it's the decline, from this year, like our this year's pullback, right? Or it's actually last year's pullback. Is pullback in the
December,
last December, last fall. And that takes us to 3,300. That's a realistic expectation. I think that's kind of where we're going. But the question is, are we going to do it now? Are we going to are we going to get a near-term pullback this going into the beginning of the year? And a
lot of people have capital gains, and for tax reasons, they certainly didn't want to do any selling until after the first.
I
think there's going to be some selling. I think that was Steve's thought that flows are going to be more to the sell side of people booking profits from last year.
And I can't really argue with that. I can't argue with that logic. And maybe Steve is right where we do some sort of pullback, towards 3150, before rallying back towards 3300. That's pretty doable in my opinion. Um, we'll see how the market reacts at current levels. One thing that I do want to point out though is that gold is strong, silver is strong,
Yes.
the yen is strong. And,
Yeah.
you were talking about the dollar yen just a little while ago. And it's one of the things that I mentioned on the week ahead video is, how is it that the dollar yen is not
Right.
a lot stronger than it currently is, based on where,
Risk
US,
on.
where US equities are at. And that, I have no yen exposure, just so you guys know. I'm not long dollar yen. I know, a lot of traders are probably short yen, long, Aussies, long, euros, whatever you're long, looking for a move higher in the yen pairs due to US equities being so strong. But, overnight, I mean, we slumped like 50 pips, overnight. I mean, I
I
know
think
that.
you brought up Aussie yen last week too, that people that were long were not getting the performance that they were looking for. And
Yeah, I mean,
Aussie
look,
yen.
the Aussie yen has actually rallied back. It's rallied pretty decently.
Okay.
I was short some dollar or some Aussie yen into um, this little false breakdown. And, we started break below this trend line, and I shorted
Oh,
some,
okay.
and then I got
Yeah.
squeezed out, and I'm like, yeah, I'm done with it until the end of the year. And so I left it alone. We had the China US trade deal that looked like it was going to go through, and it did. And, I'm glad I, got out of it when I did. But we've rallied.
Wow.
And you notice we're at a 618 retracement right now.
Yeah.
And that's where we're currently at. But again, this is one of those situations is, why haven't we gotten more of a rally based on, where equity markets are at? How come the Aussie yen isn't trading, above 80, maybe closer to 82, 85 yen? And that's one of those things that, I scratch my head and wonder why we're not seeing a big rally there. And again, we are at the end of the year. There's not a lot of liquidity. It's hard to read too much into anything that we're seeing here at the end of the year. But at the same time, you have to look at these divergences and these correlations and wonder, is there something more to it? And that's why, I look at this, I look at these yen pairs, and I am a little skeptical, especially with precious metals as strong as they are. If you look at gold, we are sitting at the 618 retracement after coming. Now, this is a bull flag pattern, right?
Got your breakout. Yeah, you got your breakout last week.
Yeah, we got our breakout last week. And the most interesting thing about this gold move is it's not pulling back. So when you're not seeing any type of pullback in gold, I didn't want that on there. Let me see. Let me undo that. When we're not seeing a pullback in gold, then the chances are that it's going to have a continuation move higher, especially at such a key fib level. I mean, this is a really key, 618 retracement coming out of this flag, and it's just holding here. So, I'd be nervous if I was short precious metals. I'd be nervous if I was short yen.
So I think maybe the theme that you're getting at is that we have conflicting risk-on moves in equities without great performance in Aussie yen. Gold is a safe haven, and it's acting good, and US dollar yen could be rolling over. So you have signs of people hedging or being cautious and looking at things that can protect for risk off or do well in risk off, and yet risk on is still happening.
Yeah, and so again, it's hard for me to read too far into it, and it is the end of the year.
Oh, I dropped my tinfoil hat where I was watching the eclipse from.
Hey, maybe there's some validity to that, Dale. Maybe there is. And I'm not a big,
I know.
Yeah,
I could understand people thinking that it's nonsense. And, I interview a lot of astronomic people, and, there's so many that, it's like they're as varied as accounts in Elliott wave, so I mean, Elliott wave, a lot of people believe in it. A lot of people believe in planets, million ways to skin a cat. But I know that I've seen things happen on moons and change of seasons and eclipses, lunar and solar. So just something I pay attention to.
well, the thing is, Dale, and the one thing that's undisputed is that you've been around the markets for a long time and you've seen a lot of things. And you're 100% right. There's 100 ways or 1,000 ways to skin a cat in the market, and really what it all boils down to is, do you have good risk reward for the trade that you're about ready to take? That's
everything.
That is everything, right?
Yeah.
So I look at, if you're saying, well, I'm going to short the S&P, if you're in that camp, well then have a line in the sand and say, okay, well, the lunar eclipse was on Thursday, so I just don't want it to break Thursday's highs, and
or at least a money stop,
yeah,
something,
some sort of stop, like I'm only going to risk $500 or
right,
$2,000 or whatever it is, and as long as you can say, well, I'm going to risk X, and if I'm looking to make Y, and it looks favorable more than 2-to-1, then you got yourself a good setup for whatever the reason. But I do look at the S&P, and I'm like, man, that is a very, very overbought daily relative strength. And I think that the market pushed right into some of that, into these levels with very overbought conditions. And, I think the risk is that we do get some sort of temporary, near-term pullback, whether it's a intermediate top or a long-term top. I'm not sure. But what we are seeing is the FX market is starting to respond a little bit to potential risk off. One of the things that's obviously really big that's happening out there is the euro dollar is well above the 200-day moving average, and that is huge. Now, did we get a false breakout in the euro above the 112 level? It's to be seen. I personally want to buy euros, and what I am looking for is I'm looking for a little setback towards 111.50, and if we get that over the course of the next couple of days, I am looking to be long some euros down there, and that's going to be a trade that I'm willing to take if we can get it. I want people to try to lean on the euro dollar after the false breakout overnight. I think the move above 112 might bring in some selling, but the flip side of that is, if you got gold and silver that are holding on to gains, maybe the euro wants to hold on to gains as well. So the longer we sit up here at this 112 level, the more risk we are. If we're above 111.50 and closer to 112, the more the risk is that we actually break out. And I think that the majority of the market right now is not positioned for a euro dollar upside breakout. I think most of the market is looking for lower euro dollars. And one other thing, Bloomberg has cited on several different occasions this morning through a couple of different intraday analysis that I follow via Bloomberg. Options markets actually starting to price in a higher euro going into the beginning of this next year. So there's a lot of traders that are becoming more optimistic in the euro, or a lot more institutions that are being more optimistic about the euro. And again, I think that the retail market is very much the opposite of that right now. So, I've been warning you guys on a potential euro breakout for a long time. We haven't seen anything in the euro. We haven't seen any real big moves. I mean, the euro's been stuck really for a year and more, and just kind of grinding. But the fact of the matter is, I think we're building a really big base here in the euro, and I think that an upside breakout above 112, a sustained breakout above 112, could be quite devastating for shorts. I think we could very easily see the 115 level. So I know we have a couple of comments that have come in, so let's Joe says, Blake, that's because the dollar index looks like crap. And yeah, actually the dollar index does look pretty weak here. We are notice how the dollar index is actually below what I would call channel support. There's this long-term channel here. We rallied back to the 200-day moving average, and we failed in the dollar index. The dollar index is very vulnerable, I would say. So I'd agree with that. Gregorio says, regarding dollar, don't forget year-end flows that are coming in end of month so far. Yeah, we're gonna have year-end and end of month, end of quarter flows that are coming through, so for sure. And so I want to warn everybody not to get too aggressive right now. And I know there's been a couple of sites that have recognized this, so I'm going to go ahead and mention it as well. We have and by the way, Chicago PMI is coming out in a few minutes, or actually not in a few minutes. Actually, I think it's coming in about an hour and 15 minutes. But I want to mention that a couple people have mentioned the move in the yen at the end of the year last year. And if you don't remember that, I remember it vividly, because one of my closest friends wanted to play golf on his birthday, which was January 2nd. And I went and and I went to play golf. And then after my round of golf, guys are like, we're going to meet up for a couple beers. I'm like, I can't, because I have to go to back home to finish up the analysis, and then I'll meet you guys back out again. So I actually drove home, and that was the day that we saw this move right here. You can see, I guess it was January 3rd. Well, let me double check. It might have been the night of the 2nd. Actually, it was the night of the 2nd, so it was January 3rd as far as Japan goes. And that move, that big washout, happened while I was actually in the process of doing analysis. It was a big, just a big move, and I'm sure some of you guys remember that, but a lot of people are citing that today, and I'll say that the obvious, because it's obvious and everybody's pointing it out, it's not going to happen. Not again this year. There's a high probability something like that is not going to happen again. So, and Dale, when you were gone, I was just talking about the dollar yen, how it moved, and all the yen pairs moved so aggressively at the end of last year.
Oh yeah,
or at the beginning of the year.
Yeah, we had that flash crash in the end.
It was a flash crash that happened.
Oh, so people are looking for a repeat.
Yeah, and because everybody's on the lookout for it, it's not going to happen, not in my opinion. So
yeah, you're probably right.
Yeah. So anyway, I just there's like I said, there's a few things I want to talk about. I'm hoping that we get a little bit of a pullback in the euro dollar, and do we have data? Is this Chicago PMI coming out right now? Hold on.
No, good morning. No, it's not. It's in about 1 hour and 15 minutes.
Right. Okay.
Good trade balance. Not a major number, but it's coming.
Oh, okay. We got trade balance coming up. Got it.
Yeah.
Let me see.
Slightly better than expected.
Okay. And good morning, Stelios. How's it? Oh, it's the goods trades balance. Got it.
Yes, yes.
Got
Good
it.
morning.
Got it. Yeah, it's very, very minor data. And if you guys aren't watching, the euro dollar has slumped just a little bit. The euro is pulling back. I'm hoping the euro gets to 111.60. I think 111.60 is going to be a good opportunity for people that had missed it to be on the long side. I think this 111.55 level is the 38% retracement. Let everybody believe this is a false breakout and let some selling come in. I think that's a realistic expectation. So good morning, Steve. Good morning, Stelios. How you guys doing?
Hello.
Did you have a good holiday?
It was very good. My main worry right now is how I'm going to get rid of the weight I gained over the last few days.
What is it, like 300 grams?
Yeah. No, yeah, I overdid it a bit, but it's okay.
That's part of the holidays, right? I overdid it as well, and I think I gained 5 pounds.
Yeah, that's all right.
Yeah. How many kilograms is that? How many kilos?
That's a little bit more than 2.
Yeah, I mean, so if you gain 5 kilos, then you really ate a lot, right,
No,
Stel?
Not 5 kilos, no. But yeah.
Richard just asked, "Is my microphone working for this meeting?" No, yours is not. If we turned on everybody's microphone, it would be
He's our guest.
Oh,
that's why he's asking. Okay. Yes, Richard, you've successfully joined the meeting, and your interview starts in 29 minutes. I'll promote you. It's an old joke anyway, and then you'll have a mic and be able to share your screen.
I remember we've had some regular guests in the past, like no one can hear me, and I'm like, yeah, if we turned on several hundred people at the same time.
Hadn't you done that actually at some point in?
I did it on the Morning Edge.
Yeah, I remember that.
Yeah, it was like 5 or 7 years ago, and somebody was like, well, this is a silly meeting, I can't even speak, and I'm like, fine, I turned everybody on. And that lasted
it was chaos.
Yeah, it was a disaster. Everybody's like, hello. Anyway, well, guys, Steve, how was your holiday?
Good. The only problem is how you go back to to normal mode. You know what I mean?
Oh yeah, my alarm clock going off at 4 o'clock this morning was no.
Yeah, I bet that was painful.
It was very painful. It was very painful. I did manage to go to bed at a very decent hour, so I got some sleep. But yeah, 4 o'clock in the morning alarm after a long holiday week. It was a little tough, but hey guys, I'm back in the chat room. We're as Dale pointed out. I want to reiterate, we will be broadcasting tomorrow. We're going to broadcast on Thursday and Friday. We will not broadcast on Wednesday, obviously on New Year's Day, but we will be here tomorrow morning. And for those of you that are part of the Forex Community, I'm back in the chat room, and so is you can see Stelios, and we're all the green admins. Polly's in here and Joe's in here, so you can see we're back to chatting. After taking a few day hiatus or a week hiatus in the chat room, so we're here. It's still going to be really slow. I would say that the market's going to be most traders aren't going to be back until after
next week.
Yeah, Monday. After next week. Or after this week is over. Yeah. So they'll be back, January 6th. That's when most of us will be back in the chat room. But I'll be in there this week, and I know Stelios is, and Steve will probably pop in every once in a while. So we'll look forward to seeing you guys in there. And I want to thank you all for being with us, and really looking forward to 2020 and for volatility to pick up in the FX market. I really think that this next year is going to be a much better year for volatility, and that's going to be good for everybody here. So,
amen.
So Steve, Stelios, Coach.
Have a
Turn it
good
over to
one,
you guys.
Blake.
Thank you, Blake.
Thank you, Blake.
Thanks, guys.
Hello, gentlemen.
Hello, Dale.
Hey,
Hello,
Dale.
How are you
everybody.
guys? Hey, how are you?
Very good. Very
Good.
good.
How have you been? How was your holidays?
Uh, th- um, I binged on Larry David Curb Your Enthusiasm on Christmas.
Okay.
You ever see that show?
Yes.
Okay, and do you think it's funny? He's
I
funny?
find I find it quite decent, but
Oh,
I didn't
okay.
have the. I mean, I
wondered if you had to be Jewish to appreciate that humor.
had a friend that suggested it to me a few years ago. Not
Yeah.
not a lot of years ago. It was something like 3 years ago or something.
Uh-huh.
So I was already like very busy, so I watched a few episodes, but I didn't really have time to follow through with that. I
Oh,
found it funny.
yeah, check. He can cause trouble over the smallest things with everybody he meets. Anyway, so that's what I did, and I went out and saw some friends and did a little singing, and I'm exhausted today.
Makes sense.
All right.
Trust me, I feel exhausted as well. I mean,
Yeah.
we had like social visits and things like that, so we were like sleeping, late. So today, waking up in the morning, going back to regular schedule, is a little bit tough.
Yeah.
You
Yeah.
need a few days to adapt.
So I see you followed the eclipse signal. Huh?
Yeah, absolutely.
You're going to start
That's me.
studying them,
Trading
huh?
eclipses.
Yeah. Well, didn't the highs come in on late at night on Thursday?
Yeah, I mean, I had already sorted like another
Yeah.
1/3 of a position. So,
I'm just, it'll just be, if this turns out to be maybe like a 5-10% correction,
let's
these
see.
work once in a while.
I'm gonna be happy with 3160 to begin with. That's my
I
first
saw
target.
that level. Yeah, that's a good level.
Yeah.
That's a great
So
trade for,
yeah.
from
So I mean, it's a great risk
3240.
reward. There's no question. There's a great risk reward for that. So
Wonder
I
if Greg
mean,
has wave 5 ending up there or anything in that level. Maybe it overshot a lot of guys' targets that were looking for a high.
I'm also looking at the same 161.8 that Blake is looking
Oh, at
for. I
30.
mean, 3317.
Yeah.
Yeah, we might actually go there very easily. But as I said, I think that we should pull back first.
Yeah.
Before we can consider that
Yeah.
possibility.
Okay. All right. What do you think about the euro with it? Is it going to be a false breakout, or I see 2 drives up here? Do you think I could agree with it's a great shot if we get a pullback to some of the levels that Blake was talking about. You have it there
Something
too.
I love the idea of euro squeezing people out.
Yeah.
I love it for multiple reasons.
You mean
First of
pulling
all,
back after people bought a 112?
no, the exact
number?
opposite. I
Oh,
think that the vast majority of the crowd is
still
still
bear.
extremely bearish and
Yeah.
fanatic about it. With Stelios, we've had the experience of knowing quite a lot of people that are really fanatically short the euro. I mean, they can't even contemplate the idea that euro can actually bounce. As many people couldn't even believe the idea that cable could squeeze people higher.
Well, the DSI has certainly reflected it more than the people you're talking to, that people are seeing more of a two-sided market than they were, say, a month ago when the dollar index was
That is very
80.
true.
And now we're trading like it's at 40 or 50 now, right?
Yeah, but positioning, keep in mind that the DSI shifts very easily, so it's a very volatile number. I mean,
yeah,
you might be at like let's say an extreme reading. You might be like at 95, and one day of sell-off can bring you down, to 80 something within a single day.
okay.
Because opinions are very volatile, especially when you see like a big move or whatever. Positioning though shifts a lot more slowly than sentiment does. So, when they ask you at the end of the day, let's say that you have, 10 days of consecutive buying of something, doesn't matter what it is. So they ask you the end of 10th day, like, what do you think about it? And you're going to be like, oh, it looks like it's going higher. And next day, you get a big sell-off. Now you ask again people just one day later, what do you think about it? And many of them are going to, look at the last candle and they're going to be like, yeah, something perhaps, that move higher is done. So, just, by a single day of price action, you'll get a big difference in the number of people that, think it's going higher or whatever. While positioning is a totally different thing, because, positioning means you take an actual position, you buy something, you sell something, you've already
you're voting with your wallet.
Exactly. You've already committed to that, to a specific stop loss, to a specific, target. So, that is something that changes, a lot slower. And especially if you consider that the vast majority of the positions in the market are, institutional positions, which are not like scalping or whatever, then, somebody can easily understand why positioning is it's like, as we mentioned in the past, it's like a tanker in the sea. I mean, you want to start turning, but it takes a lot of time. I mean, you have to go through a lot of miles of sea to actually, turn around. So, that's how positioning is. And once you get a squeeze in the market, positioning actually accelerates that squeeze, because, there are positions that are starting to square off, and that on its own, is going to move the market further, as it happened with the cable. So I still like the idea of, the euro squeezing people higher, but from a technical perspective, we still don't have what is required and requested here, as a minimum for the squeeze, and it is a daily close above like 112, let's call it.
Yeah.
So have we done that yet? No. The answer is we haven't done that yet, right? So
do you think that we will, though? That's his bias. That's your bias.
I think that we definitely will. The question is, will it be now or will it be a little bit later? I can't answer to that, especially knowing that we're still in a very low liquidity regime, and we're going to remain in one for another, let's say, 10 days, right? And, in low liquidity markets, as you know from experience, anything can happen, because, a few 100 million can actually move a market.
Yeah, remind me to take December off next year. Or at least remind me not to trade in December.
Yeah, I mean,
you know what I mean?
This summer was really horrible.
Yeah.
This summer, we had summers that were more interesting, but this one was quite horrible. Stelio, what do we have anything?
Stel, buddy.
Do we have anything that happened during the past week that is worth mentioning?
Nothing major. We had, I think, the interesting thing that happened on Friday was, we had some crude oil inventories and the U.S. oil rig counts. They were both very bullish for oil, and you can see it's still plowing higher. And I think
it's still plowing higher, but momentum is still pretty unimpressive, I have to say.
I know it's over the trend line now, though.
Yeah.
And checked it and then went again. Yeah.
Yeah.
Yeah, it's been a bit of a grind.
There was some geo news last night. I believe that the U.S. they said they did some defensive airstrikes in Iraq and Syria on some allies of the Iranians. So there was some military action there. So, things are heating up. Iran's also doing joint military exercises with China and Russia. And that's the first time they've, cooperated on a naval level like that. So, people are a little concerned.
Yeah.
Things are heating up, with Iran again. It's always something with Iran.
It is always something with Iran, and indeed.
Yeah. But no, otherwise, I mean, the main things that were taking up most of our time over the past month or two are going to continue into the new year. I think, the U.S. China, obviously there was today's headline that their chief negotiator is going to he's going to the US, right? For
Yeah.
are they going to sign? I don't know what's going to happen. So this and Brexit is the main two issues that are going to be at some point resolved in 2020. And
Yeah.
well, yeah.
Good luck with that. At least having to do with the US-China deal.
Yeah. Well, we have the election, so I guess we'll know by then. I think something's going to happen by then. So
I think nothing is going to happen. They will keep signing like phase 1A, 1B, 1C, and I don't know what else. But, you know, I don't think we're going to get any main dish event because, as I've said in the past, I don't think that Trump or anybody can actually deliver something that is going to be really attractive to the US that China is going to be willing to do so, especially ahead of an election, year that we have.
Who knows what kind of election year it will be. I just want to point out one thing, and I'm a little concerned. I'm in America, right? Mm-hmm. And I really have some concerns that there will be a peaceful transfer of power, and it's not just because if President Trump were to lose, you could say it's rigged, and it's more than him losing a job as a president. As you can look throughout history, it's about him losing his freedom, his fortune, and the life that he knew if he ends up losing power.
I believe none of that is going to happen. I don't believe that he's going to go to jail. I don't believe he's going to have any personal problems. I actually believe that he's going to get, after his presidency, he's going to be a lot richer than he was.
Okay.
And I also do believe that his chances of getting reelected are very, very good if they can postpone a recession by then, because I don't really see any Democratic candidate that has a real bounce. But as I said, unless we go in a recession, which is a decent scenario, I mean, I would consider it a certainty if I didn't know that they're doing whatever they can to push it like until the elections. So if it wasn't an election year, I would consider it like almost a certainty that we would be there already. But being an election year, everybody's going to fight against it, and the Fed is the first one to do so, obviously. So it's all about what the economy is going to be doing. If the economy is holding, I think he can.
If the economy is holding, rule of law, constitutional crisis, all those things won't matter as long as people's 401ks are okay. Unfortunately, true. Unfortunately, true. But
now, constitutional crisis, that's a big discussion to have, because if you're asking me as an outsider, the US has a huge constitutional crisis since decades ago. I mean, even from the beginning of the century, in essence, let's say tax issues. The constitutions of the US has been trumped again and again and again with the blessings of the of both parties and the judicial side multiple times. Let's say about taxation. I mean, everything that applies now in the US having to do with taxation is unconstitutional based on the Constitution. But they always find loopholes of interpretation, of judicial interpretation.
But that's different, Steve. You had both political parties cooperating with that. This is different.
That doesn't make it constitutional, right? I mean, both parties being in agreement.
Obstruction of Congress is a constitutional crisis. Not providing information, blocking witnesses, the whole process, whether it's partisan or not. Both Nixon and Clinton supplied both witnesses and documentation. That's not happening now. So it's basically a challenge of the whole system, and the checks and balances are being challenged. To me, that's more of a constitutional crisis than confiscation of wealth through taxation.
I wouldn't agree with that, because the latter is violation of basic liberties. So, I would choose that as more important, because
Okay.
think about it, by unconstitutionally affecting your wealth, in essence, they affect your freedom, right?
Okay. All right.
But it's a matter of
So
interpretation.
then I
it's-
guess, tax haven country is the only place to be then. But I do think that this is a little different politically. It's different than economically. So I don't know. Democracy is not a guarantee.
No, it isn't. History has taught that over and over
Okay,
again,
that's
right?
all I'm saying.
No,
And
there's
it
no
looks
question about
threatened
it.
to me.
Oh, it is, because it is a big cycle, right?
Yeah.
I mean, it is a historical cycle that we've seen again and again, which is what? That oppressive regimes end
Oh yeah,
with some
Richard
kind.
Field, our guest, is saying the 14th Amendment to the Constitution allows for income tax. You stick around for Richard. In fact, he's going to be up here in 9 minutes, so I'm going to shut up, and you can answer some market questions.
Sure,
And
absolutely.
Richard's. I'm looking forward to talking to him. Jim Huffman
Absolutely.
says they're purging voters everywhere here in the U.S.
Yeah. Anyhow, no need
Okay.
to have this political
Well, I don't know.
conversation.
I
Anyhow,
you know,
my faith in politics and politicians is extremely low. Extremely.
and all the weaponry here in the United States. I've interviewed some people that have said, don't worry about Iran and Russia and China and having a world war, that every major nation, and you could see it globally happening everywhere, they're going to be so busy trying to quell civil wars in their own country, they're not going to have the time or resources to fight a world war.
Yeah, could be the
So,
case.
yeah.
We do know that social unrest is increasing exponentially by the
Oh,
year
my God.
since some years ago.
They're
Yeah,
going
so there's
into synagogues and stabbing people, killing them.
things are definitely.
Can you say 1930?
Oh yeah, there are a lot
Okay.
of similarities to that.
All right.
There's no
See, I
question
said I
about
was
it.
going to be shut up, and I didn't. Anyway, go
Anyhow,
ahead, bro.
so
Please make me shut up.
having to do with technical events, I will start from the obvious. I mean, we mentioned the important event of breaking down from that trend line in the DXY back then. We retested it multiple times and it failed. And there is an obvious danger for the DXY to break down completely from here, right? I think like below 96.30, 96.40, and it's gone. So that's one thing worth mentioning. And yes, we can see a rebound in the days ahead due to end of month flows, etc. But I do believe that there is a big likelihood that the theme of this year having to do with the dollar is going to be a weaker dollar. And metals have already broken out. Crude is trying to do so, although I'm a lot more skeptical with that. Euro is attempting to do so. So the next few days are going to be quite important. We've already mentioned on the webinar I did on Friday, I already mentioned that the Aussie has already broken out from 69.30, and that is also an important development here. Above 69.30, I think that it's a good probability to see a squeeze, as we saw earlier with the Kiwi. Speaking of the Kiwi has already completed, and more than that, the inverted head and shoulders formation target, which was at 66.65. We actually now overshot it, and we're still going. Just look at the daily RSI. It's currently at 82, right? So at some point it has to pull back, perhaps because we've broken through this descending trend line. As you see, perhaps we're just going to retest this and continue higher, right? So that is a possibility. So if we see dollar strength, I think it would be worth it taking a stab of the Kiwi anywhere between 66, 65, 50, being long or being long again is probably not a bad proposition. Same deal with the Aussie. If it pulls back to 69.30, probably a good buying opportunity. Same deal with the metals, meaning if for some reason, which I'm not sure you're going to get that lucky, but if for some reason you see gold pulling back to 1480 to 1490, the breakout area, definitely a worthwhile risk reward. Same deal here with silver. If it happens to pull back to 1730, 1725, 1730, worth giving it a shot buying it. Copper has stalled in the confluence of resistances here at 285, but if it ends up taking out that resistance, you can expect more strength coming in the market. In the case of copper, any type of pullback to 270 something is back then in that support resistance area is also probably a good buying opportunity. So, many setups here that could play out very nicely with dollar being on the weak side in the weeks and months ahead. So, that is what I'm mostly monitoring. My current positions remain the same. I'm short 2/3 of a regular position in the S&P. My cost average is roughly where we currently are. I'm still short the USD NOK. I only have half of a position left, and I don't know what I'm going to do with the other half because, this was my final target at 880. But I'm not in a rush in taking profits because, as you see, if we break through 880, I mean, this is going to be a huge technical event. Just look at this ascending channel. I mean, we're currently testing the confluence of the previous breakout area. You can see it here with this horizontal support resistance area, the 61.8 of that last leg higher, and this long-term ascending channel's trendline support. This channel dates back to the very beginning of 2018. So it's like a 2-year channel, which we're attempting to break through as we speak. So I really don't want to take profits on all of it. I don't want to be out of a position here because, if for some reason we break through that as well, I mean, we can actually see, a big continuation lower here. So I'm still holding to half of my position. I mean, I'm very deep in the money now, so there's nothing to really worry about. I sorted this when we were breaking through this head and shoulders formation. We've completed this, some time ago. So, this formation is already complete. But as I said, we're about to trigger a much larger formation. So, whatever. And I'm still short the Euro NOK, which is also working out, beautifully. And Euro NOK is also in the precipice of producing like a very, very big technical event itself. In this case, we don't have a channel. We have this long-term ascending wedge. We're not exactly at support yet, but we're getting very close to that. So I'm still holding half of this as well, and it looks quite nicely. I mean, this last leg lower definitely looks impulsive in nature. So I don't want to be out of a position in this. So I'm still holding on those. Now,
nice trades.
Yeah, they ended up.
Way to end the year.
Way to end the year because from the moment I came back from summer vacations until these positions, I took a lot of little stabs in the market, and most of them were failed breakouts. So, the period from September to
a quarter almost,
including November, like September, October, November.
Yeah.
I, 2 out of the 3 trades that I was trying to take, they proved to be false moves on the side of the market. So, after like 4 or 5 trades of that, I decided that the market conditions are horrible. So I just, reduced the positions I took, substantially, and, I was waiting. So December, I decided to, go back actively in the market and establish those knock positions, and they're working out nicely. So it's a nice way to, to end the year. I started the year very nicely. Then third quarter, as I said, was not good. But I'm finishing up on a positive note, and I'm really hopeful as well that 2020 is going to be a much more interesting year than 2019 was. So yeah.
Goodbye, 2019.
Yeah, indeed.
May low volatility be forgot and leads to chaos next year.
Speaking
right.
of low volatility, it's more than obvious that the VIX is still very nicely diverging, right?
Yeah.
Just look at this. I mean, we're
Yeah,
just
it
like,
filled the gap about a week ago, that little gap, and yeah, it looks good. I like the VIX.
yeah, I like it too. I like it
New
too.
all-time highs again, and they couldn't make a new low.
I think it's I think it's coiling before another sharp move to the upside. Now, I'm not saying this is the high or whatever, but we've seen this price action before multiple times. Like, look at this, boom, then again coiling, boom, coiling again, boom. So this is what it does, and what remains a constant is the divergence, because we keep getting higher lows while the market still produces higher highs. Yes.
All right, I have to bring Richard on now, bro.
Okay. So yeah, we'll be back here tomorrow. This week we're gonna be broadcasting every single day with the exception of Wednesday. So yeah, we can go through more markets and answer questions tomorrow or in the chat room, etc. So thank you, Coach. Nice to hear your voice again.
Thanks, Steve. All right, Richard. Looks like we picked a good day to talk to you with everything that's been going on. So let's see, more promoting you to panelists and okay. I think I may have promoted the wrong Richard.
Oh.
There's Richard. I got him. Okay, Richard, you're now unmuted.
Oh, I'm muted. Great. I was going to say, I think you're going to get the volatility that you're hoping for this year.
From your lips.
I think on November 9th, you're going to see as much volatility as you would ever want to see in your life.
Next year?
Next year, when we get to this election.
Oh, okay.
Let's just hope that we won't have to wait for November 9th.
Whatever you have done leading up to November 9th, I think it will pale as to what happens on November 9th, one way or the other. Okay.
All right. Well, Richard, really appreciate you coming in during, what is basically still a holiday. And you can share your screen. If not, I can share and show your website. What do you prefer?
Let me see if I can share my screen a little bit.
There's a little green box that says share, and you click that. It's in the drop-down menu. And then it'll show your screens, and you just click share.
Perfect. Let's go with the PowerPoint. Oh, I just lost my PowerPoint for some reason, but I'll bring that PowerPoint back up because it's my favorite PowerPoint.
Okay.
I'm
not seeing your screen yet.
Oh.
Did you click the share?
Yes, I definitely clicked share.
And then it
says
start.
Once you do that, you get another screen that asks you which window you want to share or which screen if you have more than one. So
you have to select it.
Yeah.
Well, I hit that one too. So I thought that should have worked. I kept saying share to everything.
Okay, why don't you try it once again?
Try it again. Steve may not have had his screen unshared at the time. So.
No, I had.
Okay. Any luck?
Okay, so I hit share.
Yeah. Then you'll see the window come up and ask you which screen you want to share.
Yes. So I
Yeah.
was saying all the things I wanted it to share.
Nothing.
All right.
You could only share one screen at a time.
I understand, but
Okay.
it sent me to my system preferences. So I even updated my system preferences. I'm going to ignore it all and say, I've got half of you so we can talk, and you'll just have to imagine the rest of this going on.
Okay, well, let me show your website. I'm going to share then. So
Okay.
why don't you I'm showing your website right now. Can you see Richard IFT up here?
Sure.
Okay, so what was your journey like that led you to this type of paradigm that you see? I'd go all the way to, the title of your book, How Bankers Rigged the World of Finance. Tell us about your evolving into this belief. How did it happen? What's your background?
Let me go back to 1980 to 82, when I worked for the Federal Reserve.
Okay.
And if you recall, it was a period of very high interest rates.
Volcker.
With Paul Volcker. And I had a fascination with what Wall Street was doing in terms of financial innovation to adjust to those high interest rates. For example, we created the money market funds really took off during that period. And the implication of the money market funds was they disintermediated the savings and loans. If you remember, we used to have these banks that took in money with the right hand and lent it out in 30-year mortgages. So when Volcker let interest rates rise, it destroyed their basic economic model because the value of what they had to pay for funds went skyrocketing, but what they were receiving on their assets didn't change. So they all went insolvent. If you recall, in the mid-'80s, we had
the S&L crisis, the Keating Five, and then in August of '82, the low in the Dow and the beginning of a 40-year bull market.
You got it. You got it. So,
and I'm curious. Well, I have a question. Was that also the same time that they developed the euro dollars in Europe, not the euro currency, euro dollars as a funding mechanism in Europe?
That was one of those time periods when that happened.
Okay.
So this was the time of financial innovation being driven by these rates. And naturally, in 85, 86, what they went to was they went to structured finance. Because banks pretty much figured out, we need to get these assets off of our balance sheet and get it into the hands of somebody else and not take the public and not take the risk of these assets anymore. So that's finance really took off. And the S&Ls provided what I'm going to call the feed for this, because all those mortgages had to be repackaged out of the failed S&Ls. Fannie and Freddie weren't going to buy them up, so we had to move them into the marketplace. That is when you will see the takeoff in structured finance and the packaging into private label mortgage-backed securities.
Okay.
But we didn't just package into private label mortgage-backed securities. We also went to every other asset class you can think of, like car loans, credit card receivables, etc. Wall Street was very good at packaging. And one of the things they quickly recognized is investors were willing to accept whatever story they told about the contents of that structured finance package. which was very interesting to me because
You didn't know there were bag holders back then?
Yeah,
You didn't know there were bag holders?
They were the paper bag holders.
Okay.
Okay, so I actually invented a system so that investors could know what they owned, an information system for these structured finance securities. And the fundamental insight that I had for that system was you should be able to verify what you know, what you're buying. That's the basis of our financial system. If you do a search, by the way, on my website for the information matrix,
Okay.
and I think and Holmstrom is the person who you should also.
Stiglitz.
Well, you could use.
This guy?
Yeah, he's fine. That's one of the Nobel Prize winners who should have accepted long ago the information matrix. If you go down about a third of the way down, you'll see the information matrix in this post. And I'll be able to explain a little bit about the intuition behind the matrix a little bit further. You only got half the matrix. There, stop. What I did, imagine a physical model of two securities. And the only difference between the two securities is their transparency. One security is a clear plastic bag. And in that security, you can see it has a $20 bill. So if I asked you, Dale, would you buy that $20 bill from me for 15 bucks? What would you say?
Sure.
No questions asked, right?
Right.
It turns out, by the way, that I've just described with that clear plastic bag a number of the characteristics of transparency. You got to see with the $20 bill what is disclosed, and you also got to see when before you had to make a decision as to whether to purchase or not. So you could say, oh, look, $15 is a good price for that $20 bill.
Right.
What if I said $25? Would you buy it from me for $25?
Only if I wanted to have a date with you or something.
There you go.
All right. Go ahead.
Okay, so what we've just done is you showed that you would use the information that was available to you.
Right.
To make an investment decision. And as you also showed, you would only use that information, only make the investment if you concluded from your analysis of the information, you were making money on the deal.
Right.
Okay. That's all characteristics of our market, isn't it?
Well, I don't know. I know that a lot of people leading into the 2008 crisis were buying these derivatives and had no idea what was in them.
Wait, before you bought, these people bought it. Let's keep going on because I like that where you're headed.
Okay.
When I said it was $25, you said, thank you, I'll take a pass unless we're having a date.
Forget it, buddy.
Okay. That's another characteristic of the market. You don't have to invest in every security.
Exactly.
That's a very important thing because what happens is the market divides itself up on any particular security into those who are willing to go and invest in it versus those who won't. So for example, if you couldn't verify, let's imagine a brown paper bag as my other security, and I tell you it has $20 in it. Now you have to trust my story, but you can't verify it.
Yeah, Ronald Reagan wouldn't buy it either.
Correct. You got it. So you might say, I'll buy the paper bag security, the plastic bag security from you for $15, but I won't buy the paper bag security for you for $15 because I can't verify. But it turns out there are investors who will trust my story that I've told you that there's a $20 bill in that paper bag, and they'll buy it for $15, sight unseen. That's the trust but no verify collection of people. See,
like the people who came into all these IPOs, buying the dog and pony shows all over the country and internationally, and then once the IPO hit the street, most of them have really cratered. So you had willingness to buy the hope, but the reality ended up coming in, and a lot of them lost half their value.
Absolutely.
So
But
people
let's
will
take
buy a story.
People
Is-
buy a story. That's, by the
Okay.
way, is a very important observation you just made. That's behavioral economics.
Okay.
By
I have a
nature, people
PhD.
buy a story. We like stories. It's how we interpret the world.
Right.
We like a good narrative. Okay, so with that background, now let's go back and look just briefly at the 4 quadrants of the matrix. The perfect information quadrant is both you and I are looking at the $20 bill in a clear plastic bag. We both know what we're buying and selling. Okay?
Yep.
The lemon problem, 50 years ago, created by George Akerlof, or identified, I shouldn't say created, but identified. I'm a seller, and I've got the clear plastic bag view of the $20, but you're the buyer. And what you have is a paper bag view. That's an information asymmetry.
Yeah. Huge disadvantage
You got it.
to the buyer. Yes.
Huge disadvantage. Now let's go to the other side, which is Joseph Stiglitz. He's the one who came up with the antiquity dealer's problem. He said, gee, if I'm selling an antiquity, the dealer knows what the value of the antiquity is. I'm the person who inherits the antiquity. I don't know what it's worth. So as the seller, I've got the paper bag problem.
Right.
The antiquity dealer has the plastic bag.
Sure. You could say
Those
that about
three-
pawnbrokers with gemstones and everything.
You
Who
got
hasn't
it.
been ripped off?
Right. Now, that was the state of the art in 2008 for economics profession. They had identified the perfect information quadrant, and they had identified the asymmetry quadrants. It never occurred to them that there was a 4th quadrant that has to be in that 2x2 matrix, which is both parties are viewing it as a paper bag. And let me
Okay.
give you an example of a security that you're familiar with that falls in that category. Banks. You have no idea what's on their balance sheet. I have no idea what's on their balance sheet, but the two of us could trade, you could sell stock, I could buy stock, or vice versa in JP Morgan.
Okay.
Okay. Pivotal point. We bought it on a story. I sold it on a story that said JP Morgan's going down. You're buying it on a story that says JP Morgan's going up. Neither one of us can verify the story because we don't know what's underneath it. We're buying the paper bag. Okay, you with me?
Yep.
1930s, we had a depression going on. And the question was, why did Wall Street collapse? And Ferdinand Pecora led a commission into it. And what he discovered was that Wall Street makes a hell of a lot of money selling opaque products on a story. And if you wanted to rein in Wall Street and make it the servant of the real economy, what you had to do was provide transparency. But investors couldn't force the issue because Wall Street was good at finding investors who would just trust. Remember, all investment, no investment requires every investor in order to go.
Right. Didn't Mark Twain say a mine is two liars standing over a hole?
Exactly. You got it. So what his discovery was, though, was somebody needed to force transparency. That somebody became the SEC.
Okay. So when was the SEC formed? As a result of
1933,
okay, after the Depression or in it?
during the height of the Great Depression.
Okay.
And it's formed exactly to assure that investors get the information they need to be able to verify the story told to them by Wall Street.
Okay.
Fast
How
forward.
does it do? What's its track record?
The
Are they
SEC's
owned
track
by
record-
Wall Street?
The SEC's track record until 1980 was fantastic.
Okay.
And
Then they
in
sold out?
Well, they weren't sold out. I mean, they didn't sell themselves out.
No.
Ronald Reagan
They're
came in
influenced.
and said, gee, your client, SEC, shouldn't be investors. It should be Wall Street.
Oh, okay.
That was the end of the effectiveness of the SEC. Because
Okay.
suddenly they had to consider what Wall Street thought when it came to the issues of disclosure. Now, Wall Street gets a
They
concentrated...
didn't do a great job with that, or Bernie Madoff would have been caught a lot earlier.
You got it.
If they were, that was their, what they call, what's the word I'm searching for? If that was their same
Reason
thing
for
that-
existence.
Yeah.
Yes, this is exactly the issue you're dealing with, Dale. Is in 1980, the SEC goes from being the investor's advocate for transparency to having to consider what Wall Street thinks about disclosure. Naturally, Wall Street campaigns against disclosure. So now go back to the story we just told earlier about the creation of structured finance, which was at the very heart of the financial crisis. The SEC had to come up with disclosure requirements for those securities. Disclosure requirements that left those securities being opaque. So investors didn't know what they were buying. Now, let's go back to something also that happens. Think about asset managers for a second. Asset managers sell their services by claiming to be experts. I listened to you guys, for example, talking about how you think this is a good place to buy versus this is a bad place to buy in the various trades. That's an example of expertise in action. If you are an investor, and you want to buy fixed income securities, you might not think that you know everything about fixed income. So you'd go to a place like a Fidelity or a Vanguard, and you'd want them to be managing your fixed income exposure. And the portfolio manager there gets up and he claims to be an expert at managing fixed income securities. But what he doesn't tell you is, oh, by the way, I'm going to buy fixed income securities.
Because I get a nice load on the fund.
No, not that I get a load on the fund. His compensation package.
That's what I'm saying. The load. The
Okay,
commission.
his load on the fund. There you go.
Yeah. Okay.
So, but he doesn't tell you, oh, by the way, while I'm claiming to be an expert, I can't assess the risk of the underlying securities.
That's why everyone moved after the 2000 and 2008 experience to deciding to be self-directed, because they decided if anyone's going to lose my money, it's going to be me.
Yeah, you
Not
got it.
Not a salesman.
Well, but still, if you look at the Fidelities, they're huge.
They still are, aren't they?
Okay.
Yeah.
We manage more money through the so-called institutional groups than we do on an individual basis.
Including things like ETFs.
ETFs.
Yeah.
All of that stuff, still institutional.
Okay. Is our ETFs opaque?
It depends upon what's inside of an ETF.
Okay.
So some ETFs, by the stocks that are in the ETFs, are definitionally opaque. There are ETFs that focus on financial stocks.
Okay.
All of them are opaque.
What would you say are transparent? Let's just fast forward a little bit. What would you say are transparent investments in today's environment? Are there any?
Yes, the most transparent ones can be found in the technology areas. If you look at biotech, for example, they do a very good job of telling you where they are in terms of development of the drugs that they're going to sell.
Oh, but come on, Richard. I've seen so many, like if a trial ends up not working,
No.
I've seen them cut. Okay, all right. But you're just talking
What
about the
I'm saying
information.
to you is, you know that the drug is in trial.
Right.
At that moment, you can now assess what is the risk of it successfully completing the trial versus what is the risk of it not completing the trial.
The stock being cut in half in a day, that's a risk. I've
Absolutely.
seen many of them. Huh?
Absolutely. The stock could be cut in half.
Yeah.
In a day. But you knew what the risk was when you were buying the stock. You could assess that risk. And therefore, you can adjust how much exposure you take to the stock based on its risk.
Okay.
And that's what's pivotally important here. All investing is a function of exposure versus risk.
How about commodities? Gold is pretty transparent, isn't it?
There you go. I like gold.
You see it. It's it's an ounce. It's yellow. It hurts if you drop it on your foot.
Yeah,
That's
again,
transparent.
It's transparent.
Okay, currencies, you're converting even those central planners. And that's what I really want to wrap it up with. I mean, you're talking about the banks rigging it. What about what central banks have done over the last 10 years to basically manage this economy? Central banks, the BOJ buying half the stock market, all the bond market. What's your attitude on that? Is that opaque?
Let me say, it's not that they're opaque. Let me say that what's driving their behavior and what they're doing is the banks themselves.
Yeah, they're owned by the banks.
They are
controlled, not owned.
Controlled. They're not necessarily just owned, but it's controlled. And they're controlled by fear of what would happen if they don't do something. Look at what the Fed just did with repurchase agreements.
That's what I was going to ask you.
In the last 2 months.
Yeah, all that money pumped in. And the banks are forcing their hand to do it by not lending to each other.
Exactly. And by the way, the banks haven't lent to each other since September 2008 because no bank that has money can figure out whether the bank that wants to borrow is solvent and can repay them.
That's amazing. Everyone, I mean, I always ask what happened to all that bad paper, all those derivatives. There's still an off-book type of asset?
Of course, they still exist.
They're off the books, but they're off the books.
Right. We have no idea what trash exists, for example, on Deutsche Bank's derivative book. But what we can pretty much rest assured is that all of the big banks have too much exposure to Deutsche Bank so that Deutsche Bank can't be allowed to fail.
Okay.
As a result, the EU, for example, and the ECB follow a whole series of policies to protect Deutsche Bank. In the US, we did the same thing in 2008, 2009, 2010. We followed a whole series to protect our banks as opposed to the real economy. So now what you have, I don't know if you saw the thing from the BIS.
So now, is it true, Richard, and this I think is pretty opaque, the potential for bail-ins, where really, if you read the law, our deposits aren't ours. They're the property of the banks, right? So if there's a failure, it may not be governments that bail out banks this time, but depositors. That's opaque, don't you think?
Yes, it is. The issue.
Do you see the potential for bail-ins?
Oh,
more of them?
The potential for bail-ins is huge.
Okay.
I want to be on record for saying that.
You're on record.
However, having said
man.
that, I don't think any government right now is stupid enough to do that again.
Okay.
The reason is that when they did that in Cyprus, they thought they were being clever and they were getting the Russian oligarchs. But at the same time, what they managed to do was to nail the businesses that existed in Cyprus. And I'm not talking huge businesses, I'm talking small businesses who happen to have their payroll in a bank.
Right. So there was a lot of collateral damage.
Correct.
How
Now-
about the war on cash, Richard, of things like Modi did in India?
I think that that was a completely failed experiment, and we're not headed there. I know we have a Harvard
How about
economist.
Bitcoin?
Rogoff.
Is that opaque or is
Right.
that transparent? Crypto.
Well,
Bitcoin?
Bitcoin is transparent. My problem with Bitcoin is it's not a store of value in any remote sense of the word, nor can I buy anything really with it. It's
Okay.
not like a dollar
Okay.
where I can readily go to the grocery store and use it.
Yeah, because
Grocery store is not
while you're
interested in
standing
my
in
Bitcoin.
line, it would, the value would change by the time you got in line and they rang it up.
Right. And, you know, what's interesting about Bitcoin is clearly it's a highly manipulated market.
Yeah. So the manipulation is
All the rules
transparent.
that exist.
Transparent manipulation.
Exactly.
What I want to ask you is the purpose of IFT. Is there a business model behind it, and what your goal and mission is with what you're doing, talking to us today, and how you're edifying the public?
If you take that first chart, it explains it pretty well.
This?
What I've done with the Institute is we have turned opacity into an asset class. So
Okay.
it's just like you could buy gold, you can buy stocks, you can buy bonds. You can, with the initiative, you can decide how much exposure to opaque securities you would like.
Okay.
Which is
How?
huge.
By your analysis describing them?
What it,
Or doing
what we do
research
is
on them?
we provide a label. We
I
say,
see.
we use a simple label. And the simple label, the existence of it on a security says there's enough information so you could know what you own. You're going to still have to do your own homework. But
Okay.
there's enough so you could know. So when
Okay.
I was saying the tech companies, you can tend to know what you own. Whereas a company like JP Morgan, you cannot.
Okay.
Another example that I've used over the years, GE.
Yeah.
For years, I've said GE is an opaque company. You can kind of understand what they're doing with the manufacturing side of the business. But GE Capital, you have no idea what's going on in there. And you have no idea what they're now hiding.
Right.
And for the last couple of years, for the last decade actually, what you've seen is one disaster after another emerge out of GE Capital.
Okay. Well, I appreciate you coming here and talking to us about what you're doing. And are you looking for people to sign up to be aware of your label?
Dale, thank you for having me.
Oh, it was interesting. So people just follow you on Twitter, Richard, or the website, or what?
I'm always looking for people who are interested in signing up for the label. People who want to
You mean
push
people
for
selling
transparency.
investments?
These are people who are buyers. This is
okay.
This is a buy side only sort of an initiative.
Okay. All right.
Also, I like people who say, gee, is there any reason that the Fed shouldn't be forced to only lend against transparent securities? After all, if the Fed is lending against opacity, they're betting the taxpayers' money.
Okay.
I don't think there's any reason, for example, that a pension fund should ever invest in an opaque security.
Okay. Well, I appreciate it that, you know, I'm all for transparency in an opaque world. So good luck with your mission, Richard. I hope you have a great 2020 and
same to you.
Okay, thank you very much, and that you help people see the pitfalls of what they're speculating on. So thanks again for being here. And you can find Richard. Here's his website, instituteforfinancialtransparency.com, and he has kind of a his Twitter handle is at TYILLC. So there's Richard. Maybe pick up his book. Is that a book?
Yes.
The Transparency Game?
Yeah.
And they could get it from you or anywhere.
They can get it off of Amazon.
Okay. All right, Richard. Well, Happy New Year, buddy.
Happy New Year to you. And as I said, good luck with your volatility next year. I think you're going to get a lot of it in November.
All right. Thank everyone. That's Richard Field. Thank you very much. And that's a wrap for us. We'll see everyone for Turnaround Tuesday. Remember, don't just count your pips, count your blessings. And see you, Brock, Richard, Monica. Adios. Everyone have a great afternoon and get ready and prepped for 2020. Adios. Thank you, Richard.
Bye-bye.